Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets. Hey guys, thank you for watching the video. If you would, give it a like. More people are more apt to watch the video if they see a like on the video, if you thought this content was good. Also, if you want to go ahead and hit that subscribe button. I'd be producing content like this quite often, usually almost every other day, and quite a few on the weekends, whatnot. And thank you if you do subscribe. I also have links in the comment section, or links in the about section, how you can contact me, how if you want to donate to me, anything like that. If you felt like this content was good, share it with your friends as well. That would be superb, and I would love you forever for that. I'm just trying to get people more educated in the financial markets, especially as it becomes more popular. I'm trying to educate them on things that they should know that they may not know about. I am not a super investor. I'm not one of those gurus who knows everything, but I did learn a hard lesson when I first started investing and trading, and I want to make sure that the new people that come into this game don't make those same mistakes that I did. So I just want to show them the things that I wish I knew whenever I first started. So thank you very much for watching, and hopefully you enjoy the content. What's up, everybody? Here again with another episode of Bodies and Wicks. It is your buddy Ted. In case if you missed me, I am here today to talk about, if you haven't seen my videos before, so what I do, I go in and analyze financial markets for you. Try to give you some information that maybe you do know, maybe you don't know, but maybe you can put it to use someday. I primarily do this for people that are new to the game. I really don't try. I was doing kind of advanced stuff in the beginning, but it doesn't really help. What I want to help is the people that are new to these markets, especially since I'm doing a thing on crypto right now. A lot of these people don't really know what they're getting into. They just know that if you put your money into this thing, it can make you more money. And essentially, that's also what's called the stock market. You put your money in it and it grows. It's also what would be called a savings account. You put your money in it and it grows. But the question is why does it grow? Is it going to sustain that growth? And those are the kind of questions I want to bring into the conversation, especially as a beginner. If you don't know, if you think this thing's just going to take off and never come back, that I kind of want to bring you down to reality and let you know that it could definitely grow. But is this thing, if you put $20 in today, are you going to be a millionaire tomorrow? No. Hate to tell you that if that's what you're thinking, or a millionaire in a couple years. You got to really think about things, and you got to do your research. And even me, I don't know everything. I'm not going to sit here and pretend I do. But I am going to tell you some things I do know, and hopefully that I can help you. That way, whenever you do start going forward and you start looking at these things, you can start making more informed decisions, especially about if you are going to place your money into these markets, when to place your money into these markets, because that's going to be a big factor. how much you're going to put into it, things like that. You want to be smart about your money, because it's your money. If it's money you actually made and you worked hard for, you're working a job, you're making 10, 12, 15, 20 bucks an hour, or however much you're making, and you want to save that for the future. You want to retire, because I'm late to the game, to be honest. I probably should have half my retirement done by now, but I'm not. So now I'm taking the steps to try to get those last 10 years back, that I didn't even think about, putting money into the market, and I'm really going after it kind of heavy. So I wanted to share, a couple things with you guys. So first, what I wanted to get into is, basically, what does the dollar mean for the crypto market, right? So, you don't really have to buy. I mean, you kind of do have to buy your crypto with the dollar. You can buy it with other things too. You can buy it with a pound. You can buy it with a Swiss franc. But the question is how are you going to convert that to buy the crypto? Well, you got to buy the crypto first, and then you can convert it. That's probably the easiest way. But then you convert it to, that, and then you're just buying it again, which doesn't really make any sense. So the dollar does come into play when crypto is involved. If that is what my little analogy, if it made any sense to you. But first, what I want to do is I want to head on over to barchart.com, right? So this is Bitcoin futures, right? And before, I think I did a video on this a little while ago. Yes, there is Bitcoin futures, right? And this is for the month of December. So this is what people are placing their money on for the month of December, right? And what I like to look at whenever I am doing these is I like to look at this. Okay, so down here you have the volume. In the volume, you have this open interest, right? So this open interest is a good indicator on if it is going to buy or sell, right? So low interest rate means buy, right? So as you can see, these low interest rates down here, if you're putting in contracts for December back in July, you had very low interest, so of course people are going to be buying. So that's may have what led to this. So, and then all of a sudden here in mid-November for this contract, it skyrocketed, right? Generally, if you see an increase of your open interest of 20%, you're going to see a sell, right? And that's what this was. You see this interest rate start to go up, and as soon as it starts to go up, guess what happens next? Boom, it sells, right? So that's what happens because nobody wants to pay for high interest. So if you ever see that, if you ever go to barchart.com and you see an interest rate all of a sudden just kind of just slope up really quickly, get ready for a sell. So it did sell, it bounced back, it made a new high, right? We'll talk about the new high in just a little bit. But another thing you also want to keep an eye out on, and if you go up here, I guess I'll tell you how I got this. So whenever you go to barchart.com, up here you have selected commodity, and you can choose from a lot of different things, to look at the market. If you want to look at the market as a whole, I personally like to take a look at all these, especially like T-bonds or, the 5-year note, 30-year note, things like that. Even if you want to go down here to steel, you even have like coffee and cocoa. If you want to look at crude oil or gas or gold or silver or anything like that. But you also down here in the currencies, you have Bitcoin futures. So select Bitcoin futures, right? And then it brings up this, and now you have all your different contracts, right? So you can see all your different contracts all the way up until December last year. So we have December, January, February, March, April, May, and then December. So what we're going to do is you want to click the most recent one because that's going to be the most accurate one, right? And then once this loads up, it kind of gives you some statistics over here. The contract size, different things like that. This is if you're buying futures, for Bitcoin, or if you're selling them, people, this is part of the options part too. You can sell as part of the option. But let's go to the full chart here. And so I just like to click, and that's what brings this up, and it gives you this this volume. If you don't have the volume, what you can do is you can click this study right, and go down to the bottom, and you can get this volume, just the straight volume one. The other one I like to look at is called commitment of traders. There's three different ones, and just the one that says commitment of traders, not the disaggregated, not the financial, just the commitment of traders. What it'll have is it has com spec, which means commercial speculators, large spec, which means large speculators, small spec, which means small speculators. What that means, com spec, now that's your large institutions that have money in this game. So anything that has a huge bank account, that would be something like the Dutch Bank, Chase Bank, the IMF, Federal Reserve. Believe it or not, these people do have money in this game. They don't have a lot, not in crypto anyway. And I'll show that to you in just a second, versus how I know it doesn't have money in this as compared to others, but they do have money in this. Large speculators are going to be like, people that have larger bank accounts, like hedge fund managers, things like that. Your small speculators are people like you and me, people that just that want to put money in here and hope it gets money someday. Your commercial speculators usually drive the market, but that is for other what's the word I'm looking for? Currencies, I guess you could say. It's hard to drive this market, but they can drive this market with it, just because they do have that kind of size of bank accounts. So go ahead and hit add once you're done with that. Also, what you want to do is go to candlesticks open to close. That way you can kind of get a sense of the actual movement of it, what it actually looks like, right? So down here, your commercial speculators are in red, right? So you can see what they're doing, if they're actually thinking it's going to go long, or if they think it's going to go short. Now, in trader terms, going short means sell, if you don't know that, all right? So you can kind of manipulate this, pull it down in case you want to try to get all three in one screen, which is what I want to do, all right? So if you want to see what your large spec or your commercial speculators are doing, they went long here, right? So here is where they said, okay, we think that if the price is going to take off, and because you can see this number go from, let's see here, what was it before? It goes down to -70. I guess that's the number of contracts, up to 261, right? So that's when they upped it at this point here. They thought it was going to go long, and sure enough, it does go long, right? They actually remove, well, I would say remove, but they add more shorts, or maybe they just didn't add any at all. But there's less long contracts in here, and it goes to, I guess more short contracts, right? And as it moves along, because that goes down to, what was that number? 96. The next one is 98. And now it is 135. So it looks like now that it is dipped, right, they're probably expecting it to go a little bit longer. Not too much longer, because you don't see this kind of bump in here like you did earlier. So I would expect it to probably get higher, but maybe not too much higher, right? It probably could be a different kind of winding road, Now, if you, just because the commercial speculators are not very familiar with the crypto game, they do probably have a kind of a clue, but they're not on the inside as if they were, the dollar or the euro or the British pound, to where there is a system that is kind of controlling that money. And that's where they're more involved. So let's just take a look at something here. So let's just let's go to the British pound. Actually, this is the most kind of interesting one. If we go to the British pound, right, we go to the latest chart for the futures of the British pound, and we have the same. See, as you can see here, if we go to here, commercial speculators are in red. As the Bitcoin, when it was right in the middle, right? It was right in the middle the entire way. And I believe that was because they really don't know too much about that game. Well, the fiat currency, such as a British pound, is, all printed by, the Bank of England, things like that. So they kind of have an idea of when the price is going to be moved around, if it's going to go short, if it's going to go long. They kind of have an idea ahead of time. So, and that's why they, have their shorts and their longs that kind of move along with that. Because as you can see, they're going short this entire time, right? As they're going short, they add longs here. Look at that. They add longs here. As soon as they add longs, guess what? It goes long, right? They start adding shorts. Well, it goes a little bit short. And then they add longs again. And guess what? It goes long. And then they add shorts. It goes a little bit short. And then they continue to add shorts, which is kind of odd. But I'm guessing it's because it's right here. Once they hit this, then it drops heavily, right? So I'm guessing they knew it was going to get below here. So the time that they're adding shorts is, almost this entire time. They're adding longs in here too. It's just not evening out. So it's not saying these are all shorts. It's saying this is the difference between the short and the long. So there are longs in here as well. It's just that the shorts are outweighing the longs because they know it's going to drop. So once it drops, guess what? They start adding more longs, right? Now they start adding more longs, and guess what? It starts going long. So that's how you can tell the commercial banks actually have a little bit more of a hand in the actual like fiat currency markets, because they know what's going on versus the crypto markets. But then again, I would think they would know something about the crypto markets because they did put in those longs at the right time. They put in their shorts at the right time. But they just don't have a lot in there, and you can tell just because that line is going straight through the middle. Another resource that you can always go to check to see what could be happening with the crypto market is cryptocraft.com. Now, Cryptocraft, I don't know if you know about Forex Factory. Cryptocraft is kind of like the Forex Factory of the crypto market. It's a very intense, interactive forum with a lot of people that trade crypto. You can always see the prices. And, I know there's a lot of different places that have this kind of stuff. But this is just an interesting one to me because it has a lot of news and stuff as well. As well as people always posting things regarding crypto news and things like that. You can click on news to see what's going on with the news. You can click on coins to see what's going on with different coins, things like that. So I just thought that'd be a little tidbit to show you. Now, once we get over to a chart, let's check out Ethereum for a moment here. Now, I did a video also prior to this that was talking about the market maker buy sell models. So, and that's something to watch out for in these, especially if you're new to the crypto markets. And you think, crypto is just this thing that just kind of just moves upwards all the time, and it doesn't really have any other thing, than just moving up and down. You are likely to be wrong, right? So if you were to look up like something like this, so I would encourage everybody to watch this video. It's called the ICT Forex Price Action Lesson. Now, it's a lesson in the euro dollar. But it's in the market maker sell model, right? So it gives an example here if we want to kind of zoom in, right? So you have this kind of consolidation, right? And you have some more consolidation. You have consolidation at the top. That's what's called a smart money reversal, right? And here he has this that would be a breaker kind of blocked off. To where it drops below that. Once it drops below that, then once it comes back up to it, right, it doesn't trade above it, and it starts this consolidation here, and then it sells off, and it does the same thing, and then it sells off again just below this market maker sell model. So this is kind of how markets act, right? This is and it acts like this in all markets. It doesn't just do this in like euro dollar or the dollar for the yen. It does this in these kind of markets too. So, and as you can see here already, so if we were to draw like a box like he had, let's say we drew a box around this little guy. Well, uh, guess what box is gonna meet this little guy? This guy, right? So these two boxes are pretty much almost the same. This one comes down, touches this box, comes back up. Then there is also a box over here, run this guy. So its high is here. Once it goes up, it comes back down, almost touches the bottom of this, to where this box is. So this is part of the market maker buy sell model. And this is just on the daily, right? So this goes back to the entire past of Ethereum. So this goes back to 2018 here, right? This box here goes back to early 2020. So this is just boxes of the daily. If we really wanted to get into it, we could draw out these boxes in the 15-minute time chart. Right, so if we want to get into the 15-minute time chart, click auto, squeeze these together a little bit, maybe not. I guess it doesn't want to do that. See, sometimes it does, sometimes it doesn't. I don't know why. Sometimes it actually will squeeze together a lot. Yeah, I guess it's not going to do it, but you could easily do that, throughout this entire thing. You could draw boxes around here, and then you could draw a box around here. So what my point is that you could basically don't get caught up in thinking that this is going to be continuously going up and up and up. Once you study enough price action, you will realize that this is probably not going to go up. What I see here, right, this spike right here, that is a run on liquidity. Right, what that means is that if there's any sellers, any kind of trade sellers that were selling here and that put their stop loss here because they thought that was a safe spot, the market knows that, and it buys up really quick to take those people out and take their money, and then drops back down to a price that's more comfortable to rebalance. If any of these terms are not familiar to you, you probably need to take some seminars on price action. Understand how it works. So there's a lot of different ways you can look. See, now it's doing it. Now it's scrunching together. But there's a lot of different ways price action works, and how to read it, and how to understand it. So as you can see, we almost had a double top here, but then we had this spike here. And what this tells me is this is a green flag for it to trade lower, right? How much lower, that I really can't tell you. I'm not a predictor of the future, but whenever you do see something like this, a big spike up, generally what you see following is a pretty big drop, right? Or what it'll do is it'll hit something like this, right? Like let me draw a box here, because we do have this kind of box for the market maker buy sell model. You could see it come down here, tap this box, and then come up, right? And then I don't know if it'll go above here or if it would come up to, let's say we have a box just drawn around this part, right? It could come up just to that box there and then drop lower. So but that's the thing, is that we really can't predict price. We can only react to it, right? So anybody that's predicting price and telling you that it's going to be, and somebody said, $700 on one of my videos, I said, well, that's a good prediction. I said, I'd like to see, your analysis and how it's going to get there, and when. Even though it's kind of fairly close, it did get up to 635 today, I guess you could say. But my thing is, is it going to get to 700? I mean, 700 is really not too far off. But I would like to see it, and if it's going to happen, when. Personally, if it does get to 700, it probably won't stay there too long. I'm thinking we're going to be lucky if it gets to 650. Because I think we had a huge run. People are talking about it now. And now that people are talking about it, A lot of people are putting their money into it, and the market makers know this, right? And so the traders of the market, so there's a completely different game rather than investing. So if you're just putting in your money, like on Coinbase or, Uniswap or anything like that, in investing your money in something like Ethereum, then that can change the value. The price will reprice, based upon basically the volume that's in there and how much money people have put into that volume. However, the traders can, if you don't know anything about trading, I would suggest you download the MetaTrader 4 app. Trading is where you can basically it's almost like gambling, and instead of investing, you can put in a little bit of money, and you can get a great return. But also with this is that you can also put in a little bit of money and also get your account taken out in no time. So with something like Ethereum, for example, you can put in a 0.01 lot size or a mini, and for every dollar that Ethereum makes, or let's say you put a buy in, and every time Ethereum goes up $1, you would make $1. If you put in is 0.02 or 20 cents, every time Ethereum goes up, you would make $2. So you make money exponentially for every basically 10 cents that you put in. So if you put in 50 cents, that would be each dollar that Ethereum makes, you would make $5. So that's how quickly you can make money. So the traders know this, and the traders can also push the market with that kind of money as well. There is money behind that, right? Not just the investment part, but the money behind the trading. So what these people do is they can sell to buy, right? So what they will do is they will sell, right? And they will sell with a lot of money. And when they sell with a lot of money, it pushes the market down, right? And what that does is that takes the money that you had and it devaluates it until you pull your money out, or until, I wouldn't say pull your money out, but there's also other traders that will buy when it gets to a certain spot. Let me see if I can't find an example of that. It's like a like a trend line or something like that. Or actually, here, let's just do this. Let's just go with this line here, right? Oh, hit the wrong button here. Let's just say some people think this line is support, right? So let's say everybody has their limits set here as a buy limit. So if price is to reach down to this point, it automatically triggers somebody's account to purchase, right, Ethereum, right? So they think it's just going to hit this. It may go down a little bit below it, which would be their stop loss. So let's go with a long position. So let's say I put in money whenever it hits this, right? And I don't want to risk too much, and I think it's only going to get that low, because Ethereum's pretty strong, and this is a very good support line. So I'm only going to risk that much. Once it does hit that, I'm pretty confident it's going to make a new high. So I'm going to say it's going to reach 700, right? Let's just say that we think it's going to reach 700, right? And then I put in a dollar, or a mini for that trade. So you put in a mini for that trade, so that would mean for every $1 that Ethereum goes, you make $10, right? So where are we at? That's at 480, and my stop loss is at 463. Is that what it is? So that would be 17. So if you actually lost that, you'd lose $170. But if you actually got that trade correct, you would probably get in the realm of, what is that? I don't know, good $1,000 or so. That's $10 for 200, 300 something dollars, something like that. So yeah, you'd well make over a couple $1,000 if you got this trade right. Well, the market makers know this. What they can easily do is they can just push this straight through here, right? And then that $170 that you risked because you thought it was going to go up, well, they just push straight through, and then that money goes to the broker, right? And then that money that broker pays you because you were the one that was the one selling this, right? The market makers were the one selling this. They were the one that has the money that pushed it to get down to this point. And now what happens? And now it's at a good price. Well, now that it's at a good price, they're going to push it back up, right? So now they're going to take it and go this way because they can, right? So that's what I'm talking about whenever the liquidity's down here, and and also if it's the market maker buy model, sell model, and also just being careful with your money, basically. So if you are going to put in money to invest, make sure it's on a dip, it's at a low point, and pay attention to these dips in the market. Pay attention to what's happening. Pay attention to these spikes and things like that. Because like I said, like this right here tells me this is a run on liquidity, and that we're going to see Ethereum start to go down. Now let's take a look at Bitcoin. Bitcoin just surpassed its all-time high. It did that actually a couple days ago, not by much. All-time high December 17th, but just today, or yesterday, I guess, today, it did it again. And I was actually surprised by that because I actually did a video to where I thought it might actually get up to and equal to, just to try to create a double top, right, to kind of create some kind of faux sense of resistance, right? And then once it did get back up to there, a lot of people would place their sell limits there, and it would just run through it. But I think people thought that since this since this second one, even though it did kind of break the high, it was kind of like a false sense of security that this was like the top of it, right? And that it probably couldn't be broken. The market makers knew that, so they pushed through it, but they didn't push through it too hard, right? Because a lot of people think if it gets pushed through, guess what? It's a breakout. They knew that, so instead of actually thinking, breaking out, they pushed it back down, right? So as soon as it breaks through, let me put it this way. A lot of people probably had their sell limits right here, right? So it breaks the sell limit, right? They think it's going to go down. Instead, it hits their stop loss, and their stop loss is exactly, right here where this top was. They didn't think it was going to get past this top because there was already a double top. And so it breaks the top, and it gets quite a bit higher than what they expected. So they go, oh, crap, it's going to break out, it's going to sell. So then they flip, and then they start buying, right? And since they start buying, the market makers know this too, so then they turn around and they start selling, taking the money out of both of those, taking the money out of the hands of both of those types of people that are thinking that way. That's retail thinking, right? So, they want to sell before it gets to the top. It breaks the top. They lose their money, so they think, crap, oh no, we need to buy. They start buying. It turns around and it sells, and it takes their money that way. That's how they do it in a nutshell, right? So if we want to get down to the nit-grit of this in the 5 minutes of it, you can probably see a lot of market maker buy-sell models in here. Yes, you can. You can just look at this. Look at this spike down here. That's just insane. So this spike down probably hit a pretty good, hit a pretty good order block. So this is a very, very, very tough order block here. So this thing drops down to this order block and just smacks it, comes right back up. Now it's coming down to it again, and now we're probably going to see this game, especially now that we've seen the high broke again. We're probably going to see this game of consolidation. I think we're probably going to see some very interesting consolidation. I honestly don't think we're going to see this thing start going, upwards of $25 to $30,000 anytime soon. I think we're probably going to see it start dropping more and more and more again. Sorry for moving it around so much. This is my ADD. It's what I do. But I would say keep a close eye. If you were lucky enough to have Bitcoin up here, congrats to you, especially if you were one of the early ones. I would say I'd be one of those people that would probably take half my profit out right now and hold on to it and wait for it to drop to a good level and then put it right back in. Because that's just you're basically averaging down your cost of Bitcoin. You're taking your profit out at a good level, waiting for it to drop, and then putting it back in. That's just smart business practice. But yeah, that's just what we'll see. The reason I brought this up is because one of the reasons I think these are going crazy and these are going almost through the roof is we got to think about the dollar. The dollar is crashing right now, and it has been crashing for quite some time. And that's the thing. The whole time that we've been seeing this influx of Bitcoin recently, and I want to get rid of these trend lines because they don't mean anything at all anyway. Trend lines are not your friend. Just keep that in mind. Trend line. If you ever try to place a trade on a trend line, it's gonna go against you eventually. Sometimes it'll work, but the only reason it works is because it hit a price level, or it hit some kind of level that it's supposed to hit, and it just so happened to be on a trend line. That's the only reason why it would actually work. It's not because of the trend line itself. It has to do with what's on the left side of the chart. If it interacted with something with that, right? Usually like a down candle, right before an up candle or something like that. Usually that's when you'll see some kind of reversal, or a buy or a sell or something like that. But right now, what we want to look at is this is a support and resistance line right here in the dollar, right? So, and the reason I bring this up is because I think when the dollar hits this support, and whenever it gets down closer and closer to the support and resistance line, we're going to see the tops, which I think we may have already seen. They're getting close to these tops, right? They're starting to try to turn around. And maybe they're just ahead of the dollar. Who knows? Maybe that's something that we're learning from the altcoins. Maybe the altcoins know that the dollar is going to hit a support and resistance line and turn around, so the altcoins are ahead of it. So to whereas more forex, the forex market, they're usually a little bit behind. Once this hits the bottom and it hits support and it turns around, it'll take something like the euro, right? So, or no, this is the CAD actually. So it'll take something like the euro. See, this is wanting to go up because the dollar is going down. So sometimes it'll hit the very top, or the dollar will hit the very bottom. It'll be a couple minutes later, then the euro will go ahead and hit the top and then go back down because it's a little bit later on reacting to the dollar rather than working in tandem with the dollar. So, and yeah, I have a lot of lines and stuff in my analysis because I like to mark off a lot of different important parts such as daily highs, daily lows, things like that. Primarily because you usually see price go back to those areas, those are bounce off those areas, and so I like to study those areas very closely. As you can see, I had an order block here. It came up through that order block, came back down, and then is now going back up off an order block. Now, that order block that I had marked off goes back a long ways. See right here. So this is that order block that I had marked off. And as you can see, it did kind of play a significant role in this, and this is even on the daily chart. So, so that's what I want to kind of bring up. And the same thing with the British pound, right? So the British pound right now, we are in the Asian session. So I always like to mark off the Asian session, just because it seems to always play an important role somehow. Here's the Asian session here, and I'm thinking that for this one, if the dollar, right, so what we're looking at now, is that the dollar is about to hit this support and resistance. And the reason I think it's support and resistance is because you have this low coming down here, right? Comes down here, touches it, it gets rejected, and then later on you have it come through it. Then you have here. Let's take a little bit closer look at it actually. So it comes down, touches it, rejects it, comes down, breaks through it, comes up, rejects, goes down, comes up, rejects off of it, consolidates, comes up, rejects, and then goes back up. So this is kind of an important area. So that's why I marked this off as our support and resistance. I also have these two areas marked because these two areas could also be rejection areas as well, because they come off of your down candles before your up candles. Not saying all of them usually work that way, but they can. So that's why I mark them off, so that way in case it does get down there, I can take a look at it. So it looks like it's not getting quite there yet before it turns around, but it is starting to turn around. It did just end the Asian session. So right now it is probably about 6 in the morning in Germany, I probably want to say. So right now the European market is about to begin. So we'll see if this is about to turn around and go back the other way, right? Because if it does, I don't know, we'll have to watch and see, but I think it'll probably take a couple hours. I think this is probably going to come down, touch this support, and then bounce off. At the same time, we're going to see this come up, probably hit this order block and go back down. And the same thing with the pound, right? We have a recent all-time high up here. I mean, the pound does have the movements that the pound makes versus, the euro is a lot more flamboyant, I guess you could say. The movements are a lot quicker, bigger. So we could see a huge rise hit this maybe all-time high before it bounces down, on the same wavelength of this, dollar index going down, hitting the support, then going back up. These two would do the opposite, right? They would go up and then come back down. And so Bitcoin and Ethereum would act probably the same way as the euro and the dollar. They would probably go up before they come back down. But the thing with Ethereum and Bitcoin is that they are already going down. So these could already be ahead of the curve. I think crypto may have a mind of its own and know that the dollar is going to hit a low point. And that very, very low point, to say the least, because as you can see, if we go back to the dollar, right, it's already probably at its lowest low point since 2018, I want to say. So this is 2018 here, right? This is the last time we have actually made it to a level like this. Since 2018, it has been way up above this. So now the dollar is dropping, which is not good, to be honest. This is another thing about this. So since our dollar is actually losing valuation, it could be another reason why the cryptocurrencies are actually gaining more value, is because there's becoming less value in the dollar. Unfortunately, that could mean, it's going to take more of our dollars to buy these cryptocurrencies, which isn't a good thing. We want the dollar to be strong along with the cryptocurrencies, because if the dollar is weak and the cryptocurrency is strong, eventually the cryptocurrency is going to go down, because it's going to take more dollars to buy the cryptocurrency. You get what I'm saying? It's like a gallon of milk. If a gallon of milk was $1, right, and you're making $15 an hour, you can easily afford however many gallons of milk you want. You can just keep buying milk and milk and milk. You can make milkshakes with it even. It'd be with chocolate chips and swirls and stuff like that, But, as the time goes on, as the value of the dollar goes down, it's like, you can only work a couple days a week and you're only making $6 an hour. and the price of milk goes up to $4 a gallon. Can't really buy that much milk off that, so you maybe only buy maybe a scoop of ice cream with it, not 2 scoops, not even 2 scoops. You couldn't get 2 scoops of ice cream in there with that. But you could pour some milk on there and make it a little bit of a milkshake, I guess. Wouldn't be a fancy one. Probably couldn't have sprinkles. So that's where I'm kind of getting at with this dollar evaluation and what it means to the cryptocurrency. So that's one thing to keep an eye out for. Always watch out for the dollar valuation along with cryptocurrency, because it does have an effect on it. And as you can see, it's having an effect on it right now because it's really at a low point, at a very low point. And I think that's why we're at such a high point with the cryptocurrencies, is because the dollar has been going down, right? So if the dollar stuff starts to come back up, which it may, because we're going to see it hit this, we're going to see it hit the support resistance area. We'll see if it bounces off that and starts to come back up. But if not, and it keeps going down, then, we may see a continuation of, Ethereum, Bitcoin. What else is doing good? Ripple. We got Ripple over here, kind of doing its own thing. I've never seen Ripple at 60 cents. That's pretty crazy to me. Whenever I was trading Ripple just a couple months ago, it was at 20. It was hard to get above 30 cents. And in no time now it's at 60 cents. So same thing could be happening for all these guys. So just watch the dollar currency. I think it's playing almost a direct impact into the crypto market. Especially if we're talking about this whole great reset thing, and maybe we're trying to get rid of fiat currency. How is that going to impact the crypto market, especially if we don't have a dollar to buy it? Just a lot of word questions at play, but the one thing I do want everybody to pay attention to, especially moving forward, is the dollar, and how, especially if it's getting lower. If it bounces and it goes higher, what kind of reaction do we expect to see in the crypto market, right? So those are the kind of things you want to look out for. Again, use the resources that I showed you, CryptoCraft. Also use bar chart, to check out, the volume of the open interest, also commitment of traders. Things like that, if you don't have TradingView, they're doing a good sale. I'll leave you my link. That way you can get a good deal off. You can there's even really good crypto indicators. So if you click the indicator thing, and you can even just type in like crypto, you get all kinds of cool like crypto indicators. There was one that I used. That I thought was really cool. Crypto Ichimoku. No, I think it was like Cryptomoku or something like that. Cryptomoku, no. But Ichimoku, if you don't know what Ichimoku is, it's a really cool indicator. It kind of gives you an idea when to buy and sell. You kind of have to use it in specific areas. It doesn't work all the time, but it will work. If when your support and resistance areas are. If you have a good idea where it's about to turn, it'll give you kind of like a signal on when to buy and sell. It's not an end all be all indicator. But it is a cool indicator for crypto. But there's all kinds of indicators for crypto on here. That's just one of them I wanted to throw out there. But anyways, I think I've rambled on long enough. Also, if you could check out my Twitter page. It's Bodies and Wicks. Anytime I come up with an idea on TradingView, I do post it. I also, retweet some other people's stuff to have some good stuff, like here you go, or some stuff about Uniswap, things like that. So It's Bodies and Wicks, so you can tweet me at Bodies and Wicks. You can find me on TradingView at Tedzily, and then it also has my link to, of course, my YouTube and also my Twitter. So yeah, that would be me. All right, anyways, I think I've rambled on long enough. Thanks a lot, guys, for checking this out, and hopefully I shall see you soon. And always remember to keep your pants on.